Good afternoon, folks. I am Jon Najarian, and this is 3 at 3. It's where I bring you unusual option activity, and that's also called UOA, hashtag UOA. I'm having to do it, record it right now, just after the halftime report, so let's get right to that, shall we? For instance, here we go for our 3 at 3. If you want to learn more about what unusual activity means, folks, you can go to marketrebellion.com/UOA. That's marketrebellion.com/UOA. All right, you can learn all about trading stocks, options, futures, cryptocurrency, you name it, and you can do them on your smartphone. We've got an app that's been approved at the App Store. You're going to love it. So I encourage you to do that. I think it'll be something special. Take a look at this, folks. Disclaimer, this basically is saying that what I'm describing for you here are opportunities that I've taken advantage of, and it is for educational and informational purposes only. I'm not your investment advisor. You can go and basically give your money to somebody to do that for you, but I am not that person. All right. It's one of the things I really want to kind of drill home, if I could, folks, because so many of you were nice enough to get back to me and talk about volatility ranges. And thank you, John, for saying volatility from this point to this point and what it means. Approximately, whether I say 27 to 37 or whether I say 25 to 35, this is more or less a range that I'm expecting that we'll be in, unless we have either something really positive like a vaccine or a direct treatment that is getting FDA approval, or something bad, like, for instance, a second wave that is death-related, because we all expect that there will be a second wave, folks, because we've all been inside. So as we go outside, will there be people that get COVID? Of course. However, since it has proved to be a lot less I am buying calls because why? When you think about it, when we're on the low end of volatility, we're probably on the high end of a recent move in the stock market. So when we get to that lower end of volatility, I would like to be in call spreads, and I'd like to be selling, hands out, selling stock positions. If you want to view that as a stock replacement strategy, I encourage you to view it as such. What I do is, on Tuesday, for instance, when the market was stronger, I was selling stocks because we were on the low end of volatility. So I was selling stocks and putting myself into call spreads. As we get to the high end of volatility, which this morning we almost got to 40, blowing through that 35 level there, as we did that, I was a buyer of stocks. Why? Because that means I'm seeing panic. I'm seeing an opportunity to get oversold. So just like overconfidence on one end, over too much fear on the other end gets me to want to buy stocks and sell those higher premiums, which I have done. So that defined, I can do a lot more for you with that, folks. If you want to learn more, go to marketrebellion.com and you can check out, again, education, distance learning. You can do it right from your PC. As long as you're stuck at home, you might as well learn more about options. We've got great courses there, coaches and mentors. Check it out at optionrebellion.com. All right. Get into the presentation now, the meat of it. Micron, talked about it on the halftime report. I said, look at this, 13,000 of these June 46 calls traded in here. That's a big number, folks. That's 1.38 million share equivalent at the June 46 strike. So the bits of information that are embedded there, number one, stock's 44.21. So it's underneath 45. They're buying the 46. So this is about $1.80 out of the money before it gets to that level. Second bit of information, June, it's a full 30 days out into the future. How much did they pay? $2.44, all the way up to $2.80. So in other words, those buyers were more aggressive than the sellers, and they kept buying it up. And as they did that, pushed the price up, of course, because the sellers aren't stupid. As they see more and more of these calls being bought, they are hedging by buying stock or another option, and that's what we focus on over at Market Rebellion. So $2.44, since every option is for 100 shares of stock, means that they were paying $244 to a high of $2.80, which is $280. So if you wanted to control 1,000 shares of this stock, you would buy 10 options. 10 options is 1,000 shares. That would mean it would cost you on the high end $2,800 to control this stock from 46 to wherever it might go. If you wanted 1,000 shares of Micron itself, you'd have to give your broker at least half of that. Let's call it $22,000 if you bought half on margin and half from directly from the market. So that would mean you'd look at 2,800 versus 22,000 plus your financing costs and that added leverage. Or if you paid cash for it, $44,000 versus $2,800. Now you know why I love options so much. Second trade, and there's Micron moving up. As you see it earlier today, it peaked at 45. It is still up better than 2.2% as of this slide right around noon Central Time, 1 o'clock Eastern Time. Let's take a look at Metal. This is another one I talked about on the halftime report. And I like following trades and traders that are right. So this particular stock, take a look just a week ago on the 11th, somebody was buying calls aggressively at the, buying puts, apologize for that. And a put, of course, is the right to sell, folks. So look, they were buying with the stock at $10, they were buying the May 950 puts. Those are puts that expire tomorrow. So they were buying those puts and they were paying about 25 to 28 cents. Then the stock fell from $10 all the way to where it is today, about $8. That would make those 950 puts worth about $1.50. So that person cashed out, made the money on that trade. Now they're betting again that the stock goes up for next week, not for tomorrow, for next week, because look at the expiration there. The 22 ahead of May means that's the expiration, folks. May 22nd. Tomorrow's the 15th of May, the regular May option expiration. They're not trading there. They're out there in the 22nd of May expiration time frame. So bits of information here. Just out of the money. Stock's $8. They're buying the 850 calls. Next bit of information, next week, they've got basically 8 trading days to be right on this trade. They bought, just like with the prior example, sorry about that, I'm going to have to call you back. Just prior to that, they paid 29 cents to 37 cents for these calls. As they're paying that for these calls, similar to what they paid for the puts, you know, I love the risk reward here. So that's why I'm in this trade. And I mentioned it on the halftime report today. Here we are going into the 1 o'clock hour. It trades up to almost that level, almost 850, might even be there as this goes up at 3 o'clock Eastern, 2 o'clock Central. So watch these. Again, that's the 22nd, next week expiration. My third trade of our 3 at 3. Take a look here, Smile Direct Club. Here's another one that the traders in this one have been dead on. Now, what does that mean? That means that on the way up, they were buying calls from a $3.50 level to $4 to $5 to $6, all the way into the 9s. Now, after a sell-off carried it down hard yesterday, they're stepping back in, and are they buying calls? No. What are they doing? They're taking advantage of the fear in the marketplace. Somebody came in and sold puts. When my hands are like this, I'm a seller. When my hands are pulling towards me, I'm a buyer. So they were selling these puts, the June 6 puts, aggressively, collecting 85 cents. So what does that mean? That means $85 per option. So, for instance, let's say that after a big rally and then a sell-off in Smile Direct Club, you decide that, hey, I kind of like this one, but, I really liked it at 5 and 6 and I missed it, but maybe I'll get in here and sell some puts, which would obligate you, whoever sells these puts, because sellers have obligations, buyers have rights. So if you sell a put, you are obligated to buy, hands are towards me, you're obligated to buy the stock. But where would you have to buy it? At the strike price that you're short. So if you sell the 6 puts and somebody says, you know what, I'm going to sell these to you, I'm going to put stock into your account, how does that work? Basically, through the exercise process, they would put Smile Direct stock into your account if you're short these puts, and the owner of the puts exercises them. So what does that mean? That means, folks, that you could, for instance, keep that $85 unless the stock trades beneath 6, in which case they will put stock into your account. However, if they are putting it into your account, what's your net? The net is that you're buying it at $5.15. Why? Because I'm taking that 6th strike, I'm subtracting the 85-cent premium that I'm collecting, and that's why my net, where would I start to experience pain? $5.15 or lower, because I own it all the way down to 0. They've put it into my account. Now, you could sell it anytime you want, but of course, the, again, obligation of a put seller is you have to buy stock if the owner of that put exercises that put against you. So in this case, somebody does nearly 10,000 of these puts for 85 cents. So that means nearly $850,000 worth of premium is collected by somebody if we stay above 6. If we break through 6, the people that sold these puts are probably going to come back in and buy, rather get out of the stock, but that's up to them at that point. Right now, I like this trade. I sold these puts, and I'll probably be in this trade for about 3 weeks. I am Jon Najarian, folks. You want to see where Smile Direct came from? Take a look at that. $10 broke down hard yesterday, broke down again, and today, the 14th, it's at $7.22. They're selling that 6th strike. If you want to learn more about any of this, go to marketrebellion.com. That's marketrebellion.com. You can learn all about what we do as far as education, where you can do it online at your leisure anytime you want. We, by the way, have quizzes built in on each chapter so that you actually know what you think you know before you move on to the next chapter. We've also got coaches, we've got mentors, we've got a whole bunch of services that we offer at marketrebellion.com/UOA for unusual option activity. Thank you for joining me today, folks. Hope you have a great day, and I'll see you tomorrow right back here at Market Rebellion TV.